All right, so today we're talking about the Fort Worth Homebuyer Assistance Program. This is a down payment assistance program available in the city of Fort Worth. My name is Daniel Jackson. I've been a loan officer for over 20 years. I'm one of the approved lenders for this program. My goal with my clients is always to empower through education. And so part of that is this class where we want to make sure that people are aware of all the programs and the benefits that are available to them as home buyers. And I've supported thousands of clients in their home buying journey, and I'm happy to share this program with you.
Thank you, Daniel. My name is Teresa Montejano. I'm an agent for 18 years plus, and I'm bilingual as well. And I'm very passionate about helping clients to take advantage of all available benefits that are out there. And sometimes people don't realize that there's hope and options where they can benefit and into a house.
Yeah, excellent. Yeah, I agree. A lot of times people either don't know about it or they feel like maybe it doesn't apply to them or they don't qualify for it or they just make it harder than it has to be. So, um, okay, so this program, we'll dive right into it. So, the HAP program is down payment assistance or closing cost assistance for up to $25,000. If you're buying your first home in the city of Fort Worth, and basically what you get is 3% of your loan amount. And in addition to that, they also will pay the FHA mortgage insurance premium up front, which is another 1.75%. So if you're doing an FHA loan in with this program, then you end up getting 4.75% up as long as it's within that $25,000 limit. Um, in order to qualify for it, you have to be a first-time home buyer or not have owned another property for 3 years. So if you've previously owned, you're not really a first-time buyer. If you haven't owned anything for 3 years, then you still qualify under the program guidelines for this one. There's household income limits, which we'll go over in a minute, meaning that you can't make too much money or you don't qualify. You have to make enough to qualify for the payments, but not too much to be over the income limits. Now, they have a requirement that says 2 months of reserves, and that just means however much the monthly payment is, you multiply it by two, and after paying whatever you need at closing for the house, you have to have your first two monthly payments in the bank. Doesn't mean you have to pay that money, you just have to prove that you have it in your savings account or your 401k or something like that. And then the program does have a minimum required funds coming from the borrower of $1,000. So most of the time you'll need a little more than that, but depending on um, seller concessions and what type of loan you're doing and that sort of thing, you have to do at least $1,000 out of your own pocket. Now, the types of property, specifically, it has to be within the city limits of Fort Worth. You could do existing homes. They have a sales price limit of 309,000, or if it's new construction, you could go up to 329,000. It could be a single family home, duplex, condo, townhome. It just no manufactured homes for this program. Okay, here's the income limits. I'm just going to power through these income limits. This program is designed to help moderate income buyers. So that means if you make too much money, you're not going to qualify for the program. They use the HUD media or the HUD uh, area median income limits, and it's based on household size, which just means however many people are going to be living in the house, whether they're income earners or kids or your grandma or whoever's living with you, is going to fit within there. Even if their income's not being used to qualify for the mortgage, we still have to count any income of anybody that's making or that's over 18 years old and makes any kind of income. It's counted towards these income limits. Um,
Daniel, I just want to clarify that counting the people who are living in the household is not, it doesn't mean that they will get their credit check, just their income, correct?
right, right, yeah, they don't have to, right, they don't have to be on the loan or the mortgage or get their credit checked. Correct.
Okay, thank you.
Good question. Okay, other qualifications. There's an 8-hour HUD approved homeownership counseling class that you have to take. I think there's a few different agencies that offer the class. I think there might be a free one. It might cost you $100 or $200 in order to take that class. Some are in person, some are online. There's some options for that. So you have to take that course before you're allowed to get approved for the program. One of the biggest questions everybody's asking is, do I have to pay the money back? And my answer to almost everything is it depends. In this case, the loan is fully forgiven after 15 years or after 5 years, up to $15,000. So if as long as you keep living in the house, you don't transfer it, you don't sell it, you don't rent it out. Once you've been there for 5 years, then the first $14,999 of it is going to be forgiven. So you do sign a second mortgage note. So it's technically is a second mortgage, but there's no interest on it. There's no monthly payments. It just sits there as a lien until the 5 years passes, and then it's fully forgiven. And
Oh,
then the
that's
other,
awesome.
yeah, it's a good deal. It's free money as long as you keep the house for that amount of time.
Well, who
Um,
doesn't want to take advantage of free money?
yeah, exactly. Exactly. There's a lot of different down payment assistance programs, and a lot of them you do have to pay back. Some of them you even pay back as a monthly payment. Um, but this program, if you qualify for it, it really is one of the best deals out there. Um, Other questions that come up a lot, do I need perfect credit? The answer is no. You just have to qualify for the mortgage. They don't have any kind of credit qualifications specific to the program. So as long as you qualify for the mortgage and you're within the income limits, then you'll qualify.
Can you give me an example of like the credit, what kind of credit score we're talking about, like below 580, 580 and above?
So for FHA loans, 580 is the minimum credit score needed. Now, sometimes if you have score right at 580 and you're using a program like this where it's down payment assistance, and because it's a second mortgage, it technically will be a lien against the house. So you really will be borrowing 100% of your sales price or really close to 100% of your sales price. So sometimes when your credit's really right on the line, then the system won't approve you if you're right at 580, but sometimes it does. So 580 would probably be the minimum credit score. Um, we actually have a person on my team, a full-time credit analyst, that her only job is just working on people's credit. So if we have people come in and they don't qualify for credit reasons, then she looks at it, she comes up with the plan, and then she helps them to get their score higher in order to get approved as soon as possible.
That's great to know. Will that affect what kind of interest rate they get for the loan?
It can for sure. Your interest rate is definitely affected by your credit score. So having a higher credit score will help you qualify for a lower interest rate, which would mean a lower monthly payment. Um, if your income's not within the guidelines, that's another thing people ask all the time is, well, what if I make a little too much to qualify? Or then there's other down payment assistance programs that are out there. There's some that even don't have any income limits. You don't have to be a first-time buyer for some programs. So there's other programs out there. But let me just show you an example of how this might look. So 309,000 sales price. If you were to do a standard FHA loan, you put 3.5% down, plus you have your closing costs on the purchase. So without any help from the seller, then you would need about $16,572 in order to buy that house for 309. Okay. Now, something that's pretty common in this market is to get some help from the seller to cover closing costs. They can't help you with your down payment, but they could do the closing costs. And if you got that done, then you'd only need closer to 11,000 out of pocket for the same deal. Now, if you combine this program with the seller assistance, so you have the seller cover closing costs, and then this program cover your down payment, and the mortgage insurance is lower. So notice your monthly payment actually comes out about $35 less by using this program because the mortgage insurance is paid by the program instead of you adding it to your loan. And then you'd only need about $1,870 of your own funds.
That's great. And I see that the interest rate differs as well with the program, which is great advantage.
Yeah, well, I mean, if you think about the amount they give you towards the down payment assistance is at 0%. So, really you're getting part of your funds at 0%. So that's why it says a blended rate. That would be if you said the same interest rate on your mortgage, then the blended rate would come out to under 6%. So pretty good
That's
deal.
awesome. And what about if the seller complies with some credits towards the buyer's closing cost? Can the buyer utilize that amount, the money for buying down the rates? Is
Yeah,
that something
for sure.
possible?
Yes, definitely possible. So what happens with if you're doing an FHA loan, you have to put down 3.5%, right? And this program will give you 3% of your loan amount. So, and remember, it also has the minimum of $1,000 out of pocket for the buyer. So if you get too much seller credit, you either have to use it to buy down the interest rate or you end up giving it up because you won't be able to use it towards zeroing out this cash to close number. It can't be zero. It'll be about 0.5%. So 0.5% of 309,000 is 1545. So at minimum, at this sales price, you're going to need about $1,500 to get into the house.
Okay, and that's something always to consider, asking you to to take advantage on how to utilize the money that is being given by the seller.
Definitely.
Correct? Yeah,
Yeah. You don't want to miss out on something. Yeah, for sure. You want to use those funds, buy down the interest rate if you can.
right. So
So
I just,
oh, sorry. Go ahead.
that's okay. I just want to clarify that this program does not apply to manufactured homes, correct?
Right. Correct. But we do, I mean, there's other down payment assistance programs that will definitely let you do manufactured homes. So yes, if you're buying a manufactured home, you should still look into it. Maybe this specific program doesn't work for you, but there's other ones that do. So that's definitely make sure to ask your lender. Um, Okay, just doing the math really quick here. So if you need 1870 to close on this deal and the monthly payment's 2222, so you need the 2 months of reserves. So basically you'd have to have about $6,300 in the bank in order to make this work. So you you show 6,000 in the bank, you come up with less than 2,000 out of pocket to buy the house, and then you're good to go.
Awesome.
Any other questions you can think of?
No, I think that's pretty explanatory, um, given, the basics of how to utilize this program, and that that is awesome, that also can be used for new construction home. One of the things with new construction, they offer very good incentives. However, sometimes people don't have money to put for the down payment, and they have to come out either, with a down payment and get paid by the builder for their closing cost, but they don't have the money for the down payment. So this program will cover pretty much everything, and some more.
Yeah, awesome. Okay, so next steps, if you want to look into the program, the first thing you do is just reach out to one of us and we'll talk about it. Um, Sometimes people are nervous about talking to a lender. We don't have to pull your credit right away. I usually do what's called I call it an initial discovery call, where basically it's just a conversation where let's just talk. We'll figure out what your goals are, what you're looking to do, and then we'll figure out a plan for you based on that. So once you're ready, then we do a pre-qualification, which is like a 15-minute form to fill out. And then once you're pre-qualified for everything and we get you approved, then you can go out looking at houses and you're off to the races.
Yes, and we'll be ready for that. That sounds like a plan to me.
Yeah, awesome. Okay, well, I think that's it for today. There's definitely more details on the program, but I think it would be better to go one-on-one to answer any individual questions. So if you're watching this, I hope you'll reach out to us. We'd love to talk with you. We are not intimidating. We're just people here to help other people get into homes. So we look forward to working with you.
Thank you so much for the information, Daniel.
All right, thanks, Teresa.